It's another business day. I know that the mood in the air is not of business at this time, at least from here in Lagos. It's more of the holidays that to some people started yesterday, but we still have to do business. We have 55 minutes for current and relevant business conversations right here on Business Morning. I'm Ini John Mekwa, and we start off as usual from what's going on in the global oil space. We see that Brent today went up as U.S. military operations in southern Iran and President Donald Trump's mixed messaging on the negotiations between Tehran and Washington, that has kept investors on the edge. So Brent, we see, is back up just a little bit more than what we had yesterday, though. I think yesterday we ended at about $97, but we've seen it up to 98 now. $98.88. WTI is also still around there, even though it's lost a bit, 92. This is about what we had for WTI yesterday. Previously approved 30% discount on debts owed by domestic airlines to aviation agencies as part of broader efforts to cushion the impact of high operating costs. According to NCAA, the 5% ticket and cargo sales charge is a statutory levy collected by airlines on behalf of the aviation industry and must be remitted to support regulatory oversight and critical aviation services. So it's the holiday, the Salah, the Eid Kabir celebration. That's what's in the air. And we have, if you watched a sister program, Morning Brief earlier, you would see Kelly Agiga is in the market with the rams. And we hope to have him on the program here in Business Morning to give us updates of what's happening there. So, of course, there are prices of ram, but there's also the traffic that stops those who want to go to work from their homes or coming to Lagos. It's on both sides of the road, though I must say, from my observation, not as worse as it was yesterday. It's a bit lighter today, but Kelly will join us to tell us what's happening on ground. Right before then, we're going to speak to the Chief Executive Officer of Financial Derivatives Company, Mr. Bismarck Rouhani. They did some findings also on what's happening with the prices of ram and cow. We heard it surged, sometimes above 50%, Mr. Rouhani. Well, I don't know if I have to eat ram at this time. I can wait. I don't have to pay that extra 50%. I can wait until all of this is over. I hope by then that the price would have reduced at least a bit. Good morning, Mr. Rouhani.
Good morning. Thank you very much for having me today.
Good to have you.
Yes, you're right that the price of rams and cows, beef, are up generally, over 47 to 50%. And what is strange is the fact that a big ram is going for about 1.5 million, while a small cow is going for about the same price. But we've seen the big cows go as high as 3 million. So apparently, the price sensitivity and elasticity of beef is quite high. I don't know whether it's because of the ram, because the Salah, which is going to happen Wednesday and Thursday. But after that, what's going to happen? There is definitely a cost of transportation. There's also the fact that the substitutes are not that readily available. Therefore, we begin to see that. So there's seasonality, there's a festival period, and then also there's a shortage of protein, generally speaking. And therefore we should brace ourselves up for a general increase in prices. And if you look at the slides that are there, you'll find that the price of rice has gone up by about 8% in the last 1 week to 65,000, down to 60,000. And the price of a bag of garri had gone up by as much as 5% to 19,000. And tomatoes up by 87% to 150,000. 150,000 per basket of tomatoes, up 87%. Onions up as well to 80,000. Vegetable oil stayed flat at 17,000, and a bag of pepper stayed flat at 140,000. So I saw your program yesterday. The cost of a healthy diet is 1,500. I don't know what you can buy with 1,500. If you were to buy 1,500 as for a healthy meal, I'm sure everybody will be unhealthy in this country. 1,500 cannot buy you anything. That's the truth.
Well, Mr. Rouhani, in spite of this hike in prices, If you have to do anything on the Lagos-Ibadan Expressway now, I mean, you certainly have to consciously tell yourself to be extra patient because of the crowd. I mean, like half of the road on Kara Bridge and around has been taken over by trucks, cows, rams, and those who were buying and all of that. So, I mean, I was just thinking, prices are higher, but people still have money to buy, or else, what are people doing? What's causing the traffic? So I don't know, perhaps we have some kind of immunity.
It was Kennedy who said, you have nothing to fear but fear itself. Inflation expectations are that prices will go higher. So a lot of people are buying now, right, so that they can actually hedge against an increase in price. But I think those fears are mainly unfounded. Because the truth is that in economics, we have what we call the budget constraint. You only have so much money, and when the money is finished, you can't buy anymore. Maybe you can borrow a little bit, but the reality is that if you're buying the next cow, I don't know what you're going to do. Because you're not only buying the cow or the ram, the beef, you have to buy all the other ingredients to make whatever it is. Or it is possible that there's a hidden income. A lot of people are, when they tell you that they have no money, they really have money. If not, how would you buy this kind of cows for 3 million? And many of them are actually giving it out as gifts. It's part of the inducement factor. And this is political season. So maybe part of the people you say in the primaries have been giving some beef and cow and rams and all of that to induce voters.
Okay, Mr. Ruwani, just hold on a bit. I learned we have Kelly standing by now. I'll let him tell us the situation on ground, and then we can have you react to it. Kelly, can you hear me? Hello, Kelly? Kelly, can you hear me? I think we're having a bit of a technical hitch right there. I hope we can have Kelly. Sorry about that, Mr. Ruwani. So Kelly is with the rams and the cows. So we wanted him to tell us, but if you conclude your thoughts, please.
But what I'm saying is that, this is political season. This is spending season. This is Salah season. So who knows how much of the price increases that we are seeing today as a result of inducements and things to motivate voters to stand behind their candidates. That would be interesting, but I didn't see people standing behind their candidates with cows, but maybe the cows were in hiding and then people actually now did that, and after that, after voting, you got your ram or your cow and then take it from there. But it's an interesting time, but I think one of the things we need to talk about in it today is the GDP numbers that came out. And the GDP numbers came out at about 3.89. While compared to Q4, there's a slowdown, but I think we need to take something into context. One is that at 3.89, Nigeria's GDP growth rate is higher again than its population growth rate, which means that, technically speaking, Nigerians will be better off. Your income per head should be increasing, one. Two, it also looks at, when you look at the population growth rate, Nigeria's growth rate is higher, but also technically, and if you look at growth over the period, Q4 is always the period in which you have the highest growth rate. So in Q4 we had 4.02% growth, and now it has come down to 3.89. Why does that happen? Q4 is Christmas and all the other things, and so there's a lot of spending. And Q1 is when, after spending in Christmas and New Year, people now slow down on their growth. They have no income. People are paying school fees. So that is a tradition. And if you see that from the data that we've seen, the highest Q1 growth rate before this quarter, was 3.13. As a matter of fact, in last year it went as low as 2.31, 2.27, 3.13, and this year it's 3.89. So the fact that it has declined compared to Q4, but it is infinitely higher than what it was in Q1 last year. Very, very important. Secondly, what is the aspiration of Nigeria? The aspiration of Nigeria, and the president has said it, is that we should have a $1 trillion economy by 2030. That's not going to happen. But it's good to aspire, it's good to be ambitious. Therefore, to achieve that growth rate, or to achieve $1 trillion in the year 2030, you need to grow about 15% a year for the next 2-3 years. That's not going to happen. So the World Bank has raised our growth projections to about 4%. And I think that's, compared to the past, that is quite interesting and impressive. So what are we going to see? And when we now look at the various sectors that grew in it, this is where it's interesting. The fastest growing sector this time around again was oil refining, 37% growth rate. So if the GDP is going at 4% and oil refining are going at 37%, boy, that's a sector to be in. And all of us know why. One, Dangote refining is on fire, it's firing on all cylinders, aviation fuel, diesel, PMS, and cooking gas. We also have the telcos. Telcos grew by 12.24%. That is phenomenal. That is, the telcos are going 3 times or 4 times the rate of growth of the economy. The refining, that is the Dangote refinery, is growing about 10 times faster than the economy itself. Crude petroleum, on the other hand, grew by only 2.46 because production was average around 1.4. Trade grew by 2.05, and that affects everybody. Everybody in Nigeria is a trader. Then water transportation, 4.20. But look at the areas that contracted. Air transport contracted minus 7.62. You were just announcing now that some of the airlines who were suspended, Federal Aviation Authority, MCA is going to lift that no pay, no flight. Because the air transport contracted by minus 7.62. We also saw some contraction in road transportation as well. Crop production slowed down. So what are we saying here? We are saying that while the overall growth rate has expanded, it is restricted to certain sectors. Generally speaking, oil came down marginally, production, but services actually grew. So what we should be looking at, what happens in Q2. Q2 was when Iran, the US-Iran conflict started. We are going to see some contraction in Q2, and we are going to be seeing a tale of two cities, that some sectors will do well and many sectors will do bad. But we see also that insurance actually increased. Why would insurance be increasing in growth rate very rapidly? Because people now know that if you do not insure your assets, you will not, and you lose it due to any number of actions, you may not be able to replace it. So a lot of Nigerians are becoming very, very aware and sensitive to insuring their assets. I think that is one of the key things that I wanted to bring to your attention this morning.
All right,
so we've said it. Okay.
Yeah, thank you so much, Mr. Irani, for bringing those to our attention. The fact that even though we saw a drop in the GDP quarter on quarter, it's because of normally in the fourth quarter, we see that extra activities around the festive season, and services still leading. And of course, the role that Dangote has done. We saw S&P Global. I don't know if you saw that story. Yeah. S&P Global, yeah, they did attribute the positive that we have.
The economy was, the S&P Global is saying, look, if there was no refinery, then Nigeria would have been in chaos.
Yeah.
Now that there's a refinery, is Nigeria optimally utilizing that refinery? The answer is yes. Now, so what is going to happen, that is for you and I, as we go into this IPO season, which is this in the next 1 or 2 months, you can see that this is a win-win ticket, both for Nigeria as a country, for Dangote refinery, and the fact that we are not queuing up to run things this way. Can you imagine what would have happened if there were queues and cows at the same time? I don't know what would have happened.
I know, right? Well, thank God we don't have that situation, Mr. Bismarck Kurani, Chief Executive Officer of Financial Derivatives Company. Thank you so much for your time.
Thank you very much for having me.
And I believe we have Kelly now to tell us or give us updates what's happening around Kara area, the market, the road and all. Kelly, can you hear me?
Well, currently we are, perhaps one would say, the heart of the Kara cattle market. But just to do our viewers the proximity between here and the Lagos Ibadan Expressway, just right behind me To the extreme there, you have this familiar green and white flag, which many people who fly this axis should be familiar with. That's the Kara Bridge there. But right here, this place is called the Tarmac. And it's called the Tarmac because it houses cows. This section is the cow section. Earlier on, we did our reporting from where we had rams and all of that. But here, now we have cows. I understand they call it Malu. So take a look around me, a lot of cows. Let's see. And you can see 2 or 3, 4, 5 persons. You can see these clusters of persons who are gathered here. And that's because negotiation is ongoing. Today is the last trading day ahead of the festivities, which is going to kickstart tomorrow. So a lot of negotiation is going on here, a lot of business activities. Take, for instance, the people you see with these yellow jackets are POS officials right here in the Kara market to show you the structure the leadership has put in place. So those who are POS operators have these jackets with them, so you can easily identify them. So you do not need to come here with cash. You can make these transfers or get cash via the POS officials. But someone who understands this market and the workings of this market is right here with us, and he'll walk us through some other details of this market. Alhaji Hamza works here at the Kara cattle market, and he's right here with us. Alhaji, please, let's see how we can talk to you. Okay. Good morning, Alhaji.
Good morning. How are you, sir?
Very fine. Talk to us. What's going on? What's?
When you look at this particular place, you see that everybody is very busy, buying and selling. The buyers are negotiation. Sellers are also attending them. When you look at all over, you see them where they are making it. You see the POS. Even if you don't have money, don't come with money. Just come here. Whatever the amount of money you need in this particular place, you will get from the POS. Well, look at this now. You find out that a lot of people now are bargaining. When they are bargaining, they will, from here now, when they buy the cow, now they will take it outside to their respective places. That is how this place is called Tarmac. Tarmac means a place where cows are deposited. So whosoever wants to buy will come here and buy it, depending on his pocket.
Alhaji Hamza, what is really very essential for many Nigerians who are watching us is just how much can they get an average cow? Take, for instance, we have this one here that we're looking at. What's the pricing like?
Let me tell you now, today is not like before. Now, because of the expenses of the transportation now, a cow that you bought last year at the rate of 200,000 naira, 300,000 naira, now is getting to 500,000 naira. When you look at this cow as it is now, the average here now is not less than 600,000 to 700,000 naira. That is how they are.
Wow, 600 to 700,000. Wow.
That's the average.
That's the average.
That's the average.
So there's no cow for 1 million or 1.5 million?
There are cow of 3 million. There are one of 4 million naira. Last week we sold one cow at the rate of 5 million naira. Even at 5 million naira.
5 million naira for one cow.
For one cow. But what you look at it, you call it elephant, because it is as big as it is. If you go to the elephant side, the elephant side are there. You can see the cow of 3 million, 4 million to 5 million naira, depending on what you want. Yeah.
All right. So that's what this area looks like, Ini. The network is really, really bad here, and the environment also looks really, really messy because it's been raining all morning until now, and the weather looks like it's going to rain any moment again. So it's really messy here. So but try not to show how this place looks so that we don't mess the breakfast of Nigerians. But that's what the market looks like. A lot of activities, negotiations, bargaining, because today is perhaps the last trading day ahead of the Eid al-Kabir, which kickstarts tomorrow in earnest.
All right, Kelly, thank you. As you noted there, the network is not very stable. I wish we could have some conversations there. And, one thing that Kelly just said towards the end there is the state, the infrastructure in the markets. You go to some other African countries, South Africa, Kenya, even Rwanda, I just came back from, and you're in the market, everywhere looks neat, and formal. So why, if it's a ram market that's generating revenue, why can't we have the ground, made and cement and things like that? This is Nigeria, the giant of Africa. Shouldn't we be leading the way? Well, that's just one observation from there. But we can see the price of things. And earlier when he crossed over during morning brief, the person he spoke to there had said they don't have as much patronage as they would have loved to. So even though everywhere looks crowded, maybe not everybody there is actually buying. But it's the situation, the Salah starts tomorrow, and one way or the other, whether it's a cow, a ram, maybe a chicken, or fish, somebody will eat tomorrow. Let's take a break on Business Morning. When we come back, we're still staying on the economy. Please stay with us. Still watching Business Morning here on Channels Television. Yes, Mr. Rwani did mention the GDP. Let's settle on that and look at the microeconomy status of Nigeria at this time. So that's GDP that was released yesterday by the NBS. Shows that the GDP grew by 3.89% year-on-year for the first quarter of this year, 2026. And then real GDP 3.89% in Q1, coming from 4 points in the fourth quarter, the final quarter of 2025. Nominal GDP is at 110.78 trillion naira, up from 94 trillion naira in the first quarter of 2025. That's looking at it year on year. We saw the top 5 contributing sectors right there. Of course, we see trade, services, the sectors, non-oil sector, oil sector also contributed a whole lot to it. Now, let's delve into this. Those are the top 6, I believe they are, contributing sector to the GDP number that we just saw yesterday. Well, let's delve into this with the Chief Executive Officer of Cowrie Asset Management Limited, Mr. Johnson Chukwu. Mr. Chukwu, good morning. Welcome to the program.
Good morning, Ini. Thank you for having me.
So share with us your observations, the high point of the GDP numbers that was released yesterday.
Well, if you look at those figures, a couple of things will stand out. And one of which is that the service sector is actually the sector that drove the GDP growth of 3.89% in the first quarter of this year. If you look at the services sector, it grew by 4.31%. Overall GDP grew at 3.89%. And which means that actually the other sectors like agricultural sector that grew at 3.15%, the oil and gas sector that grew at about 2.57% actually dragged down the services sector's growth. And that's why we had a growth of 3.89%. Again, the service sector accounted for about 57.7% of the GDP, which means the economy has remained a service-driven economy. The least sector of the economy, the industrial sector, grew at only 3.5%. And then agricultural sector, that accounts for about 23% of the entire GDP, grew at 3.15%. Yes, if you look at where we were at some point, I mean, first quarter of last year, it grew about 0.07%. So this is a material improvement. But this sector accounts for almost a quarter of Nigeria's GDP. And that's why the performance of the economy is largely tied to the performance of the agricultural sector. And then if you look at other sector that grew, that drove performance in the first quarter of this year, you see the trade sector grew about 17.89%. You see about the trade sector, you saw other sectors that drove economic growth, like crop production, which is agricultural sector. And if you look at the agricultural sector, it's largely a crop production-driven agricultural sector. Then you talk of the real estate sector, you talk of telecommunications sector, and then you talk of construction. And then you have crude, petroleum, and gas that grew about 3.92%. So these are sectors that actually, that for business leaders, for economic managers, they should focus on what do we need to drive the growth in the major contributory sectors of the economy.
So are there dangers? You did note that the services is still driving the Nigerian economy, even though a lot of people, I believe, would have expected or preferred that the industrial the manufacturing would be the major driver. Are there dangers building our economy and the growth on services?
Well, the danger, well, I won't call it danger. The issue is that our economy did not go through a natural phase of development. A natural phase of economic development, we start from extractive industry, agricultural, mining, then you go to the industrial sector. Then from industrial sector, you go to the services sector, before you go to the digital sector, digital-driven economy. Today, we have an economy that is largely extractive industry-based, which is a primitive economic format, and then you have a services sector. And then the transition that should have been the middle phase of development, which is the industrial sector, we seem to have jumped it or skipped it. And the challenge with that is that, given the size of our economy and the structure of our environment, where we have a population of about 230 million people or whatever, above 200 million people. If you don't have the industrial sector, if you don't have the real sector of the economy as a dominant sector, you deal with high level of unemployment, because that's the sector that spins out jobs. Unfortunately, we don't have that sector. Elsewhere in the world, economic drivers, economic development agents drive the economy. Where the society is a high population society, they make sure that they are a productive economy. And that productivity will ensure that you have an industrial sector, which is what China has done, which is what India is doing, which is what Vietnam is doing. Several countries that have large population, Indonesia, they are all focusing on how do we make sure our economy is a productive economy? How do we make sure our industrial sector is the dominant sector of the economy? Countries that have transited the way we are done are feeling the pinch. Take, for instance, UK. UK is now a purely service-oriented economy. The problem with that is that you do not have a staying power. Your economy becomes very vulnerable. So that's the risk associated with a service-oriented economy, particularly in a society that is highly populated.
Because I was going to ask you about UK, because UK is largely a service economy and they are counted among the developed. So maybe we should learn some lessons from them if we want to go the way of building the economy on services.
That's the worst mistake anybody will make. Let me tell you, cast your mind back. If you look at the history of industrial revolution, it was driven by United Kingdom, the industrial revolution. And what did he give them? He gave them power, he gave them military power. He gave them dominance over the whole world. They became the strongest power because they had industrial base. The industrial base was on which military power is built. And then the economy became dominant globally. And then they have consistently transitioned from the heavy lifting economy, which is the real sector economy, to the light economy, which is the service economy. And what's happened, I'm sure you may be aware of the mockery that Donald Trump gave them, that even their warships could not function when they were summoned to come and support the US in the war against Iran. But what I'm just emphasizing is that if you have that transition, your economy becomes very vulnerable. It now depends on what happens elsewhere in the world. Contrast that to a country like India. Contrast that to a country like China. China has become the industrial base of the world. If you just move back to about 1978, 79, 76, China was a beggarly economy. China could not feed their population, but today everybody goes to China produce because they did the necessary investment that will support this sector of productive activities. And that's what we need to do. You can't have a population of about 200 million people and they want to be service-oriented. You're going to deal with an unimaginable level of unemployment, and what goes in unemployment is corruption. And bear in mind that corruption leads to what? Crime. And bear in mind that has crept into the UK economy. If you go to London, you can actually be mugged on the streets of London. It wasn't there when they were producing the economy, when those hands were in the factories working. So it is one trajectory that no country will want to follow, given the present implication of that and given the future implication of that. UK exited from the European Common Economic Zone. Have their leaders are saying we want to. They're not saying we're going to go back into the Eurozone, but they're saying we want to now have more reintegration with the European Union, because a lot of the goods that you see in UK are imported from other countries of the world. That's not the route to go. But dwelling on our own particular peculiarities, we have over 200 million people. Today, nobody knows what our unemployment rate is because the figures from NBS, people have question mark on the figure from NBS. But if you look around, you can actually see unemployment rate maybe in the region of 20 to 30%. The key thing is that part, what the fallout of a high rate of unemployment is high rate of crime. You are dealing with crime, elevated crime in several regions of the country. If they have factories where they can work, if they have a viable agricultural sector where they can work, then many of them will not be in the bush attacking and kidnapping.
The story without sentiment. So let's look at some of those microeconomic numbers that have been observed and shared. Yes, we know that the credit rating agency S&P Global, they upgraded Nigeria's sovereign credit rating recently, but when we look at what PricewaterhouseCoopers talks about Nigeria's poverty rate, they said it could remain at 62%. So, of course, when there are no jobs and we don't have industrial activities, and then we can expect that the poverty rate would remain at over 50%. More than half of Nigerians have been rated or could be in the poverty line this year, 2026, approximately 141 million. Poor households are estimated to spend 70% of their income on food. Humanitarian groups are also warning that up to 33 million Nigerians could face severe hunger conditions. And as you noted, I mean, if an individual is hungry, there's no limit to the desperation or the desperate measures that could be taken to fit that hunger. So I guess we need to look more at the way to deal with our microeconomic scenario if we really want to change these GDP numbers for good and in reality.
You know, the reason why the GDP figures are published is to guide policymakers to drive economic development in the right direction. When we talk about the GDP figures, they are not just for discussion purposes, they are for information, but they are for decision making. We just talked about that the service sector accounted for 57.7% of the GDP, and that it grew about 4.31%. So yes, the first question the government should ask, what is it that is driving the services sector? And why is it that the real sector of the economy, the industrial sector, is not growing at the same rate? The industrial sector grew at 3.5%. Why couldn't it grow at 4.31%? Because if it had grown at 4.31%, the GDP would have grown above, overall GDP would have grown above 3.89%. So when you ask that question, you realize that the reason why the service sector seems to be dominant in the Nigerian economy is because it does not require critical infrastructure to support to support growth. It doesn't require, those in the service industry do not require to have 24-hour light. The industrial sector requires 24-hour light. The services sector do not require rail lines to convey their goods and raw materials. The industrial sector will require efficient transport system to convey goods and raw materials from either seaports or place of production to the seaports. So you now look at what are the other constraining factors. Then when you recognize that, I say, look, for us to have an efficient industrial sector, then we need to have an efficient, cheap and efficient energy sector. When I mean cheap, because the cost of energy is critical, apart from the availability. Then you talk of what other critical resources they need. They need very efficient transport system, logistics support. So if you address those two alone, you are going to make real sector productive activities more efficient, more attractive, and probably you will attract more people to invest in that sector, and even attract foreign investors to invest. So the key thing we need to do is that we need to look at, because you really can't bring down poverty level if you don't have household income increase. The most effective way you can have household income increase is to make sure that every member of the household is of employment age, is able to get employment that fits his or her own skills. And that way you have households that have multiple income, and people will upscale their skills to improve their income level. That's the only way we win people, put people out of poverty.
All right, Mr. Chukwu, thank you so much for that elaborate scenario you have painted on how perhaps we could reduce those poverty numbers. Mr. Johnson Chukwu is the Chief Executive Officer of Cowrie Asset Management Limited. Thank you for your time.
Thank you for having me.
All right, now let's go global. And today we do have Will Ibong.
Great. Now let's begin with stories happening around the world outside Nigeria. The United States has carried out what it describes as self-defense strikes in southern Iran, targeting missile sites and vessels allegedly threatening American forces near the Strait of Hormuz. Now the strikes come as President Donald Trump pushes for a broader peace agreement aimed at easing tensions and securing the reopening of the strategic shipping route. U.S. officials say the military action was limited and defensive, insisting diplomatic efforts with Iran are still ongoing. Now, Iran has signaled a possible easing of its internet restrictions as diplomatic talks with the United States continue. State media says authorities approved plans to restore internet access to conditions that existed before tighter controls were introduced earlier this year. The blackout has disrupted businesses, limited access to global online platforms, and affected millions of users across the country. Iran says the rollback would be implemented gradually, although no timeline has been announced. Now, see, China's Defense Minister Dong Jun is expected to skip the Shangri-La dialogue in Singapore for a second straight year, according to reports. The annual summit is Asia's biggest security forum, bringing together defense chiefs, military officials, and policymakers from across the region at a time of heightened tensions between China and the United States over Taiwan and the South China Sea and broader regional security issues. Now, reports say Beijing may instead send a lower-level delegation, a move analysts say could limit opportunities for high-level military engagement between the world's two largest economies amid rising geopolitical uncertainty. Still in Asia, the Bank of Korea says rising bonuses in South Korea's semiconductor industry could increase inflationary pressures and drive up housing demand in key technology hubs. Bank of Korea board member Lee Chang-yong warned that strong payouts from major chip makers are boosting household income and consumer spending as the country benefits from the global artificial intelligence-driven chip boom. The concerns come as South Korea's semiconductor sector records strong earnings on rising demand for advanced chips used in AI technologies. The central bank says the surge in income could complicate efforts to maintain price stability and manage financial risk in the property market. Still in South Korea, the Kospi Index climbed to a fresh record high on Tuesday, leading gains across Asian markets despite renewed geopolitical tensions in the Middle East. The benchmark index surged more than 3%, driven by strong investor appetite for technology and semiconductor stocks. South Korea's financial regulators are stepping up monitoring of about $37 billion in overseas private credit exposure amid rising global concerns over risk in the fast-growing sector. The Financial Services Commission is reviewing domestic institutions' exposure through funds and structured investment products linked to foreign private credit markets as global watchdogs warn of potential spillover risks to the wider financial system. The move reflects growing concern over the rapid expansion of the private credit and its increasing links to banks, insurers, and asset managers worldwide. Next up, we see European Central Bank policymakers back the case for higher interest rates in June as inflation remains above target across the euro area. ECB Executive Board member Isabella Schnabel told Reuters the central bank should proceed with a rate increase next month despite easing geopolitical tensions linked to Iran. She warned that energy disruptions continue to feed into broader price pressures, keeping inflation above the ECB's 2% target. Her comments add to expectations that the ECB may move in June as it balances weak growth with persistent inflation risk. Now, Morgan Stanley has appointed a former Societe Generale head of Japan regional bank sales to strengthen its institutional client coverage in the country. The move is aimed at expanding the U.S. bank's footprint in Japan's financial markets as global lenders compete for deeper access to Asian investors and rising capital market activity. The hire is expected to support Morgan Stanley's fixed income currencies and rates business in Japan, which remains a key focus area for growth across the region. Finally, GSR Ventures, an early backer of Chinese social platform RedNote, is seeking to raise about $350 million for a new fund. The firm plans to deploy the capital into artificial intelligence, consumer internet, and other technology startups across Asia. GSR is known for backing several high-growth tech companies, including RedNote, as investors' interest in Chinese tech assets continues to recover. And that's your Global News Brief. I'm Will Ibang.
Thank you so much, Will. And just before we go, take you to the local bourse here in Nigeria. We see it's red this morning, but it's not so much. 0.02% down is what we see the all share index, but it's still retaining the 251,000 level. The most active stocks this morning is Access Holdings. It has lost more than 1% this morning to Tantalizers also. Mutual Benefits also down. But the top gainers, we see Ikeja Hotel. Seems like the penny stocks catching the attention of investors. Austin Lars is up. Ikeja Hotel is up. Sky Shelter Fund, Triple G, those are the positively viewed stocks at this time. Dangote Sugar is down this morning. It's lost 10% already. Can't go lower than that. So Geregu is still there, losing more than 10%. Premier Paint is also down, NCR Nigeria. But fresh numbers will come your way at 1:30 during Business Incorporated. Willie Bond will be here to take you around the world of business in 25 minutes. I'm Ini John Mekwa. Do have a great day and a very good holiday ahead.